how to deal with the bear markets. Definitely, we are in a downtrend, and last few years, investors have been embraced with more about the mid and small cap stocks on into their portfolios, and mid and small cap stocks were the flavor of the market in the past 24 months and all. So one need to understand before investing in any kind of mid and small cap stocks, the nature and the behavior of these mid and small cap stocks. They are high beta in nature, uh, uh, and uh, and they will respond to the greed and fear in the same way. Whenever there is an uptrend, these stocks tend to outperform, and whenever there is a downtrend, and what we are witnessing is a complete downtrend in the market, and these mid and small caps tend to underperform during these kind of phases. So
Okay.
whenever any investor is investing in a mid and small cap space, one need to be ready. These kind of extra volatility they need to embrace while investing in these mid and small cap stocks. And one thing is, at this point of time, the quality should be the template for the investors.
Right.
If the mid and small caps is a wider universe, not like the large cap universe where it comes with the Sensex 50 companies or the Sensex 30 companies or Nifty 50 companies, but whereas the mid and small cap universe is a very large, vast universe. And
Right.
in the past 24 months, not even mid and small cap investors, many of the investors went on to pick up the micro caps and
Right.
SME stocks. These are the talk of the
So,
town.
Kranti, would it be fair to say that this is the froth in the small cap space that the market regulator was talking about a few months ago? And is it fair to assume, though the market regulator said that there's no need for the regulator to comment, but as an equity strategist, do you feel this is the froth that was there in the small cap space? And do you believe that this froth has now been taken away?
Karthik, you're absolutely correct. Okay, there is definitely froth in the mid and small cap space, but to make a point, there are some pockets where the froth has built up in the system,
Okay.
but there are some quality companies are there which are available at a fairly valued, and also we also need to give the valuations are related to the future growth also. When there is a clear-cut earning visibility and a strong order book, and management have the clear-cut execution capabilities, those kind of stocks which have the quality. But there are some stocks where they don't have any business model, okay, just on the sake of the news and the market mechanism. That's where the concern area, that's where the froth comes into the picture. So out of 100 companies, mid and small cap companies, there are some pockets, there will be a froth. That is the reason investors need to be very stock specific and sector specific while picking up the stocks in this mid and small cap space.
Okay. Kranti, is it fair to say at this moment that we are definitely in a bear market? Can we assume now with some degree of confidence that this is indeed a bear market and there is no upside in the foreseeable future?
Karthik, here a couple of factors we need to consider before defining this is a bear market case.
Okay, how
In
do
a
you
bull
define a bear
market,
market? Just for all the viewers watching us, what exactly is a bear market? Because they are seeing
see,
wealth erosion for the last 5 months and there seems to be no end to it. So, what is a bear market technically?
typically bear market is a activity, is a period where the stock prices got corrected and the volumes are low and there is no activity in the market for a prolonged case. You can say a couple of quarters, okay, prolonged case can be defined as a bear market. What I can sense at this point of time, it is a downtrend in a bull market case, because India is a country where as you mentioned that the GDP is at a 4-year low, but still we are a fastest growing economy in the world. And also the corporate profits witnessed last 2 quarters some kind of a softening of the growth and softening of the profitability. So due to these global factors and domestic factors also, we are witnessing through one kind of a downtrend. So whether we call it as a bear market, it's a downtick in a classic bull market. So we do witness these kind of downtrends. Whenever Nifty comes below 23,000 levels, there is a kind of some kind of a sense of a bear market that we witnessed in the past 24 months. So I don't think this as a bear market case. It's a downtrend in a classic bull market case, Karthik.
Okay, downtrend in a classic bull market, not exactly a bear market. We'll keep technicalities aside, but what is driving the mood of the market today of all days, Kranthi? Is it to do with US inflation data? Is it to do with, again, tariff talks on BRICS nations as high as 150%, which is spooking the markets? Because as I'm seeing right now, Sensex is down almost 0.9%. That's almost a percentage down, almost 700 points down in just the first 20-25 minutes of trading this morning. So what are the triggers for the sell-off today, Kranthi?
One thing is market on a closing basis Friday, the Nifty closed below 23,000 level, and also it closed the crucial support zone of 22,800, 750. That was the crucial support zone for Nifty. With the global cues, the downtrend in the US that has created some extra pressure on Indian equities. So that is the reason on a Monday morning we can see selling pressure that emerged in the large cap as well as mid cap space is concerned, Karthik.
Okay.
And the foreign portfolio has been the
Of
unprecedented
course, the
sell-off
sell-off.
mode.
Right.
And they sold for a tune of more than a lakh of crores during this phase of this downtrend. So that's
Right.
the reason for creating the extra pressure on the market. And whenever in a downtrend, what happens is the psychology or investment attitude of the investors. They normally the investors who joined in the equities in the recent past, they will be always in a wait and watch mode, or they tend to sell. That's the attitude or the psychological mood of the investor.
Right.
That's where that causes the extra pressure on the market.
Right. So, Kranthi, I want to understand, and this is a question that I think every trader, every investor out there wants an answer to. Kab tak? How long is this pressure on the markets going to continue, and how long will investors have to continue bearing this pain of seeing their wealth erode? Is there a timeline you can put? Is there some study, some research, some analysis, some data from history that you can throw to help investors understand how long are they expected to deal with this pain?
Uh, Karthik, one is the news flows. Okay, in terms of the technicalities are concerned, it seems to be the markets are in a oversold zone, and it seems to be looked at the bottom, but nobody can't figure out the exact bottom for the markets always. What happens is when the slew of negative news are the foreign portfolios have investors have been unprecedented way when they are selling. Okay, there will not be the bottom. Figuring out the bottom should be very difficult. But as per the levels and technicalities are concerned, this looks like to be a bottom at this point of time. The valuations are entering into a fair value zone at this point of time. So the once the global cues set right, when the stability in the global cues emerges, not only Indian markets, look at the way US markets have taken a beating on Friday night. That's creating some kind of a extra pressure the global markets, and also the Asian cues also looks this morning in a negative territory. That was creating the pressure on the market. As for the Indian domestic fundamentals are concerned, we are at a right way. We are at a on track at this point of time. The corporate profits, despite of the slowdown in the first couple of quarters and the third quarters, even though it's not not enticed the market, we have not witnessed any kind of a negative signs in terms of the corporate profitabilities are concerned. Yes, I completely agree with you. There is a slow pace of growth, but definitely and when we interact with the managements, they're quite sanguine about the next couple of quarters, how the things are going to be. So that's where the markets are positioned at this point of time. I'm sure there will be a sudden recovery in terms of the market and stock prices are concerned. And Karthik, when this kind of downtrend comes, this is where the opportunities emerges. Okay, this is where the margin of safety tend to go up in majority of the stocks. So on a longer term perspective, if the investor have a horizon more than 1 to 3 years, this is the best time to chip in into the Indian markets, Karthik.
Okay, best time, but people who are watching the screens right now may not think this is the best opportunity with Sensex down almost 1% in trade. well below the 74,600 mark, now trading at 74,562. And look at the Sensex heat map on your screens now, and this is what it looks like. It's a sea of red. You've got the banking sector, you've got the IT sector, and you've also got the heavyweights, including Reliance and Bharti Airtel, in the red this morning. Even the power corporation companies, Power Grid, NTPC, are down. The only thing which is showing a little bit of resurgence today happens to be the auto space, with M&M up about 0.8%. Remember, this is coming after the lows that it had hit on news reports of Tesla entering the Indian market with its slew of EVs. There's a good recovery in Sun Pharma also this morning. Sun Pharma is up about 1.3%, which had taken a beating after the tariffs on the pharmaceutical industry were mentioned by Donald Trump, the President of the United States. Kranthi Bathini, I want to come back to you with one final question on the show this morning, and this is to do really with the sectors that investors should watch out for, and perhaps a sector or two that they should be bullish on in this, what you call a slowdown, a downtrend in the bull market, and not exactly a bear market. Which sectors should one be wary of, and which sectors should one become a little bullish on right now?
Uh, Karthik, at this point of time, because of the market is dominated by the global fears at this point of time, the news flows that are coming from President Trump has been weighing more pressure on the market at this point of time. Look for the domestic centric sectors at this at present, like the healthcare, which looks very attractive to us, and also infrastructure, the domestic consumption. These are the themes that are going to play a safe play at this point of time. If the investors have a high risk appetite, one can look the IT, because even though the stocks are going through a downtrend, once the US is in a uptrend, that's the main reason why when the dollar get appreciated, that is a positive impact on the IT companies on a medium to longer term trend. And also, if the US is expanding, definitely IT budgets are going to go up on a medium to longer term basis. So one can start picking IT stocks also, despite of this kind of a negative news that are coming into the market at this point of time. Investors have a 1 to 3 years kind of horizon. Definitely they can pick. And banking and financial services stocks also, they are more about domestic in terms of the growth, but they are more prone to the global flows. So one can pick up stocks in the banking and financial services also for a medium to long term. And defense, which is a more about the domestic theme. India's defense companies, from the net importer, now Indian defense emerged as the exporter. So defense is by and large a domestic theme. So these stocks have corrected from the high around 30 to 40%. So for a longer term basis, one can start picking the Indian defense stocks also. They have a
Right.
strong order book and clear earning visibility.